Hi friends, in this video I want to speak about 3 hidden stocks that might very well become the dark horses in the next 2 years. And the reason I am calling these stocks as hidden stocks is because they are not constantly hitting the news. People are not talking about them because people are busy talking about markets reaching all-time high right now. And also HDFC stock has fallen by close to 10% in the last 5 days. Just on HDFC, I created a detailed post on my YouTube member community talking about the Q3 results and what is leading to this fall and what are the future prospects. And if you're interested in such commentary and analysis, you can consider subscribing to my YouTube member community. How to do that is very simple. Go to YouTube, search by Rahul Jain Stock Market, and you will see my channel coming up here. You will see a verified tick next to my channel, right? That's very important. What you do is click on membership and then click on join button. And this way you can become a member of my community. Let us now go back to 3 stocks of this video. First stock is Jamna Auto Industries Limited. Many of you may not even have heard the name of this company. It's an auto ancillary and I will talk about the details of this stock. But if you look at the price chart, right now the stock is trading at around 112 rupees level. Last 5 years stock has only given 82% and last 1 year has only appreciated by 4%. This stock has not given any good run up in the last 1 year. And that is the reason I'm talking about this stock, right? It's a micro cap stock ranked at 716 with a market cap of close to 5,000 crore, not even 5,000 crore right now, right? Now, if I just come back and show you the chart of this stock, you will notice that from COVID time, the stock gave a very, very good rally. And from January 2022 onwards, the stock has been moving sideways and has been in the range of 100 and 120. So almost 2 years have gone by and the stock has been nicely consolidating in this range of 100 and 120 and has not given any good run up, right? Now let me walk you through the fundamentals of this company and what does this company do, what are the risks with this company and what are the future prospects of this company, and I'll give you positives, negatives and totally unbiased opinion. So if you look at my screen, the company started back in 1954. It's an auto ancillary company and they manufacture suspension solutions for commercial vehicles such as tractors, trailers, buses and so on. One of their key product is leaf spring, right? What does it look like? So if I show you, this is how they look like in terms of the conventional leaf spring, Z spring and so on. People who are mechanical engineers will easily understand the role of springs in the suspension systems, right? Also they manufacture bus air suspension, trailer air suspension, brackets, axles, etc. So a lot of products that go into the commercial vehicles, right? Now, if I talk about the new segments, and this is where I get excited about this company, that the company is also entering into agriculture based segment. So they are going to manufacture products such as brackets, ATS brackets, shackles, U-bolts, hangers, etc. So they are entering into new segments as well. The machines that are used in the agriculture, right? Also, the company has 10 manufacturing plants and 2 more plants are coming up. Point to be noted, my lord, because this is an important point. I'll talk about the capex plan as well. But very quickly, 90% of their revenues come from leaf segment, right? This is their key product. And if you look at the customers, Tata Motors, Ashok Leyland, Daimler India, these are the 3 customers that are contributing close to 70% of their revenues, right? Now, these are all very growing companies from a commercial vehicle perspective. Tata Motors, Ashok Leyland, Daimler India, very, very good companies. And they are the key customers of this company. 70% of their revenues are coming from there. I see that as a strong point of Jamna Auto Industries, right? Now, if we continue to carry on and talk about the capex plan, this is what, again, very positive news is that the company is putting 200 to 220 crores of capex as there are 2 plants are coming up. So company is going to expand and that is going to give boost to their revenues and profit. So that is looking very, very positive from a company's growth perspective. Also, if you look at what are their goals for FY27, the company wants to get 50% of their revenues coming from new segments. So company is looking to innovate, company is looking to grow, right? As well as from their new markets perspective, the company wants to up their contribution from 20% to 50%. So company is looking for new growth revenues coming from new products as well as new markets. And from a marketing perspective, this is one of the very, very good strategy. Now, if I talk about the P&L of this company, you will notice that in the last 2 years from 2021 to 2023, the revenues have almost doubled, right? And from a profitability perspective, the profits have almost gone up by 2.5 times. So from 73 crores to 168 crores. So very, very good momentum the company has built in the last 2 years, right? Now, if you look at some of the fundamental profitability ratios, you will notice that from a ROCE perspective, last 5 years ROCE is very healthy, 26%. Last year's is 27.5%. ROE number is looking very, very good, 22%. Earning per share growth in the last 3 years has been fantastic, 51.3%. Very, very good numbers from a profitability perspective as well. Now, if we talk about the company's balance sheet and look at the debt here, the company is having very, very minor debt position right now, 69 crores as of September 2023. And the reserves are all-time high. So I can call this company as net debt free because the reserves are higher than the borrowing. So there is some gross debt here, 69 crores, but from a net debt perspective, the company is debt free, right? Now, if I come back and talk about the valuation, if you look at the PE ratio of this company right now, at the time of recording this video, it is trading at 23 PE roughly. The industry PE is at 32. But if you look at the peers as well, so companies like Tube Investments, very good growth stock, is trading at 80, massively overvalued in my view. But if you look at this Jamna Auto's PE right now is 23. This being a micro cap stock, 23 PE is still slightly on the higher side, but the stock has been consolidating in the last 2 years as we saw. So I think this is pretty much stabilized from a PE perspective. The one negative point that I do not like about this company is the PB value. And if you look at the PB, it is trading at 5.17. The industry is at 3.62. So it is definitely overvalued from a PB perspective, right? But if you look at other peers in the industry, you will see all these companies such as Minda, Tube Investments, Samvardhana Motherson. I talked about this stock as well in one of my videos. It is trading at much lesser PB than other peers, except Samvardhana Motherson, which is at 3.22, right? So this is only one negative point from a valuation perspective, that the PB is on the slightly higher side, but from a PE perspective, the company is looking good. Overall, what are the good things about this company is that the company is a growing company. The company is putting 200 crores rupees of expansion into their plans. So there is going to be some growth coming up in the next 2 years. And this is where I think the stock has been consolidating in the last 2 years in the range of 100 to 120 as we saw. It means that there is a good chance of the stock giving good returns. Again, not a stock recommendation for you. I've given you positives, negatives as well. What you need to do is do some research. And last point that I want to talk about is also the shareholding pattern. If you quickly look at it, from a promoter's perspective, it remains solidly at around 50%. There is not much movement here. From a FII's perspective, if I just look at the last 3 quarters, you will see it has gone up from 3.29% to 5.7%. So last 8 months, 9 months, the FIIs have shown some interest in it. But from a DII's perspective, they have been selling this, potentially because they might be sitting on profits. As we saw that last 2 years, the stock has not moved much. Maybe they are booking the profits at this point in time. And this is what we see in the chart here as well, that there is a lot of volume going on right now. So if you look at last 4 or 5 months, if you see these bars here, this is showing the volume and it is very high. So there is definitely a lot of trading going on right now in the stock from a buying and selling perspective. A lot of interest seems to be there in the market. So I won't be surprised that if this stock comes out to be a dark horse in the next 2 years time. Again, don't go and check the stock's price every single day. Stocks do not move like this every single day. But in my view, next 2 years might be showing good growth in this particular stock. Again, a very big disclaimer that do not take this as a recommendation. I've given you a lot of information about this stock. Do your own research as well. And if you like this sort of analysis, hit the like button on this video. Let me know in the comments a simple thank you. That would be much appreciated. Let's move to stock number 2, and the name of the stock is Chaman Setia Exports Limited. You might be wondering, first Jamna, then Chaman. What's happening with you, Rahul? Why are you coming up with such companies? Well, what's in there for the name, right? Nothing. I'm just looking at the companies which are fundamentally strong and bringing you a lot of information at zero cost, and you are the ones who need to make decision about whether to invest and whether not to invest, right? Now let me walk you through this stock, which is Chaman Setia Exports Limited. Last 1 year, the stock has appreciated by close to 71%, right? The stock is right now trading at around 240, 242 rupees level. The stock is a micro cap stock, which is ranking at around 1215 with a market cap of around 1200 crores only. It is a micro cap stock, right? Now, if I talk about what the company does and the fundamentals, the positives and the negatives of this company, let me walk you through all the details. So if you see, the company is one of the oldest rice millers come exporters of basmati rice, right? I'll talk about the rice segment as well so that you get a lot of information. But if you look at what is happening, company is exporting to 90 plus countries, right? But shortly, I'll tell you that 60% of their revenues come only from 5 countries, right? And that is where the details really matter. So if I just continue to talk about this company's fundamental now, right now the price to earning is 9.54. I'll compare that with the peers as well in a minute. But if you look at the EPS growth, 3 years has been 31%. Very, very good growth. If you look at the ROCE in the last 5 years, 23%. Very good number from a ROCE perspective, from a EPS perspective. Overall, fundamentally looking very, very good. If I go and talk about the company's PE and PB ratio from a valuation perspective, right now the PE of Chaman Setia is 9.54. For a micro cap stock, you wouldn't expect the PE to be at industry level, ideally, right? The industry PE is at 39. So there is a lot of room for this stock to grow from a valuation perspective. The nearest that you will find is KRBL, another rice exporter, which is trading at 12.59. LT Foods is another rice exporter from a rice perspective, and that is trading at 13.44 right now. From a PB perspective as well, it is one of the lowest, 1.87. Industry is at 4.09. The closest that you will get is KRBL, which is at 1.84 PB ratio, right? I hope the definitions of the PE and PB ratios are very, very clear to you. If you are a beginner, please do a Google and get yourself very familiar with what is a PE ratio, what is a PB ratio, what is the significance of these in the valuation, right? Now, if I continue to show you the other P&L factors of this company, you will notice that in the last 3 to 4 years, the company has almost doubled the revenue. So from 800 to around 1400, not even doubled. And I'll talk about why the revenues are not growing at a rate I would like it to. But the profitability perspective, it has gone slightly more than double, right? In the last 3 to 4 years, from 52 crores to 180 crores. So if you look at the sales growth, it has been 7% only, but the profit growth has been 59%. I'll talk about it, why the revenues are not growing at a very good rate while the profits are growing at a very, very good rate, right? Now let me continue and I'll talk about their financial performance over the years. So if you look at the revenues, 16% CAGR in the last 5 years, right? If you look at the EBITDA, it is slightly on the lower side. One of the things that I do not like about the company is the EBITDA margin is at around 11%. That is low in my view, I think, from a profitability perspective. But what you will notice here is the net worth of the company has gone up consistently in the last 5 years from 226 crores to 600 crores. So almost tripled in the last 5 years. Debt to equity ratio. Now, debt matters a lot when you're investing or when you're considering investing in micro cap stocks. So the debt has come down. Debt to equity ratio has consistently come down from 0.47 to 0.20, which is a very, very good point from this company's perspective, right? Now, if I come and talk about the shareholding pattern of this company, if you look at the promoter stake in the company, you will notice that from last few years, it is at strong 74% and they are holding on to this company. From a FII's perspective, there is a lot of interest in the last few quarters. It has gone up to 1.7%. It used to be 0.15% back in 2020. And from a DI's perspective as well, in the last 2 or 3 quarters, the stake has gone up to 0.38%. So there is a lot of interest coming from FIIs and DIs into this company as well, right? If I now talk about the FY24 H1 highlights, you will notice that revenues have fallen by 15%. I'll talk about it in a minute. The EBITDA has gone up by 26% year on year. The PAT has also gone up by 26% year on year. Now, the reason the revenues are down is because of cyclone-led disruptions at Gujarat port in June 2023, because of which the company could not export a lot of rice. So the top line will get impacted naturally, but the company has still maintained a very good growth in the EBITDA margin, which is profitability, as well as PAT perspective, right? Now, if I talk about the export bans that India has done, recently you might have heard in the news that the rice exports have been halted by Indian government. Why that is? Mainly because the rice and sugar prices right now are all-time high from last 10 to 15 years. And what is leading to that is 2 or 3 reasons. One is the war in Ukraine that has caused logistic issues. Number 2 is also sudden change in the climate conditions, because of which the production of the rice has fallen down, right? And as a result, the revenue of these companies are not growing at a very good rate because the production of rice is low. But what that does is that the prices of the rice go really high, and that causes inflation within the domestic market. And this is where Indian government is saying that the rice cost is going high because A, we are exporting it, and B, the production is low. We are not having enough rice within the country. Therefore, let us ban the export. And Indian government, for the same reason, banned the non-basmati rice exports out of India, right? Now, what exporters started to do was they were starting to actually put non-basmati rice into the basmati category and started to export it. And therefore, the Indian government put a condition on the basmati rice export as well at a price which is 1200 per ton, right? So there's a lot going on from an export policies perspective. And that is one of the risks with this company, that if the export policies are changed, or if there are bans, then the stock's revenues are going to be impacted. But what we are seeing in the last 2 or 3 quarters is even though there has been export ban, the company is doing pretty well, right? Now, let me also give you a sense of where their export revenues are coming from. So Q2 FY24, Middle East and Africa comprise 40% of their export revenues. And also this is exporting to Yemen, USA, Mauritius, and so on. But more importantly, from a geopolitical perspective, the war that is going on between Israel and Palestine, what you will notice is that the company has not witnessed any impact on export due to ongoing war in Israel. Very, very important point, because geopolitics can impact the company's performance a lot. And also, if you see, the top 5 countries contribute 62% of the export revenues. Which are those 5 companies? Let me quickly talk about them. These companies, the company is not revealing the name of all the 5 countries, but they have indicated USA, Canada, and Africa. This is where this company is less impacted from what is going on in the Middle East right now from Israel and Palestine's perspective, what is happening from a Houthi attacks perspective. Again, that still remains a risk from this company's perspective. So please make sure that you are at least listening to the Q3 revenues of this company before taking any call, because November, December, October period, what is happening from a revenues perspective, profitability perspective, because the Houthi attacks started in November. I created a Hindi video on Houthi attacks and explained the fascinating story of Houthis in Yemen and why they are attacking ships. You can consider subscribing to my Hindi channel as well. I'll put the link in the description. But again, the point being, the Chaman Setia Export as a company is a fundamentally good company. There are risks associated with the company that I've talked about, but ultimately it is your decision whether you want to invest in this company or not. Please do not take this as a stock recommendation from my side. I've given you positives, negatives, and given you my unbiased opinion. With that, let's move to stock number 3. Let's move to stock number 3, which is Federal Bank Limited. If you look at my screen, you will see last 1 year, the stock has barely given any returns, 8% only. The stock is trading at around 146 rupees at the time of recording this video. Now, if you go back and have a look at the Federal Bank's stock price history, you will notice that in the last 5 years, if you look at it, from April 20 onwards, the stock has been growing consistently. It used to trade at around 44 level during the COVID time, and now it is at 147. So very, very good growth it has shown in the last 5 years. If I talk about the PE ratio of the stock, it is median PE is at around 10. And right now, as you can see, the earning per share has gone up consistently in the last few years. That has taken the PE slightly to less than the median PE right now is at 8.6, right? Now, one of the reasons that the stock got my attention was because of its shareholding pattern. If you look at the FIIs, it has gone up from 24% to 29%. In fact, in the last few quarters, they have been buying this stock. From a DII's perspective, it has marginally gone up 44%, right? But more importantly, from a public shareholding perspective, you will see that late Shri Rakesh Jhunjhunwala's portfolio has added this stock. Also, Zerodha Broking has got some stake in this company in the last few 3 to 4 quarters. So there seemed to be some interest in Federal Bank overall from a shareholding perspective. So that also got my attention that yes, maybe we need to analyze this stock further. So let me go and talk about some of the key metrics from a banking perspective. The deposits growth, if you look year on year, has been 19%. It is a decent growth. I wouldn't say this is very high growth, but it is a decent growth. From an advances and loans perspective, year on year growth is 18%. Again, a decent growth. From a total income perspective, it has gone year on year 32%, which is great, right? The company has delivered the quarter ending December to be the highest ever quarterly net profit, and they have crossed 1,000 crores in the history, which is great that the company is growing, right? Now, of course, there are some risks with this company. Let me also walk you through those. But before that, actually look at the NPA, which is another good thing, that the NPA, gross NPA and net NPA both have fallen consistently. So the asset quality of the bank has improved over a period of time, which is a great sign from a bank's perspective. One of the things that I do not like about the company is the net interest margin, which is under pressure right now. It used to be at 3.55. It is coming down to 3.19%, which is a risk from my perspective. Hope the bank can turn it around. And just to put this in some context, if I look at the HDFC's net interest margin, you will see it is at around 3.6% post the merger. It used to be at around 4% prior to the merger, which used to be a very, very good number. But from a Fed Bank's perspective, coming back to it, it is slightly degrading the net interest margin, which is again a risk that I want you to be aware of. But from a net NPA perspective, as we talked about, it is declining, which is a good sign from bank's perspective. Now, if I look at and talk about overall deposit trend, it is looking very positive. As you can see, year on year growth is 19%. The CASA also has slightly dipped in the last couple of quarters, which is not a great sign, but I think that's okay. One quarter here and there does not make a big difference. Now, one of the attractive thing about Federal Bank is that the price to book value is only 1.39. The book value is 105 and the stock is trading at 146. So from a valuation perspective, I think this is looking very, very attractive. But please do not take this as a stock recommendation. I've given you some key inputs about this company. Please go ahead and do your own analysis. But more importantly, what I want to do is watch this video where Nikunj is talking to Fed Bank CEO, and it will give you a lot of insight about this Federal Bank's growth perspective as well. Please go ahead and watch that video. I highly recommend you to watch this video.
Let's first understand the big picture here, and the big picture here is that Federal Bank continues its growth momentum. It is growing at a run rate which is higher than the industry average, and the CASA numbers, I won't say enviable, but they are rock solid.
With that, I hope you enjoyed this video. If you did, press the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such more videos for you at zero cost. With that, I'll see you in my next video. Until then, keep rocking.